Welcome to the Ross and Cromarty Citizens Advice Bureau Right Here, Right Now podcast. In this episode, it is part 2 of our debt podcast. So in the first part of the debt podcast, we covered how you find yourself in debt and what happens when you're in debt, and looked a little bit about the different types of debt that there are and what will happen when creditors try and contact you. So in this second part, we're going to cover off what you should do if you find yourself in the situation where your debts are becoming unmanageable, what the different options are, and what we can do to help. So I have again with me William and Simon, our money advice advisors. Thank you for joining me again, guys.
Hello, Emily.
Hello.
No bother at all.
So what should you do if you find yourself in the situation where you've got debts and they're becoming unmanageable?
Well, initially, the best thing to do is to seek help, and that could be from ourselves. There are other areas where you could seek help, but seek help from ourselves, and not. We touched on this previously. Not to avoid any creditors' letters or emails or anything like that. Keep an open line of communication with your creditors as well. That's a good thing to do. But what we do with clients who come to us for help with money advice, we have initially we deal with any emergencies that might crop up from the priority debts which we mentioned previously. Rent arrears, council tax arrears, mortgage problems, that kind of thing. But generally what we do initially is provide clients with a money advice pack. Now this gives us an opportunity to get the whole situation from the client, if you like. So this, the pack, we ask them, if they don't feel able to complete the pack themselves, we will help them to do that. But what we do is look at the whole picture, and this would mean, for example, obviously looking at the client's income. This could come from the benefits that they're claiming. Universal credit, could be PIP, could be DLA, could be any benefits that they are claiming. Obviously, their salaries as well, if they're working. Looking into all sources of income, pensions as well, if they're of that age, state pensions and private pensions and things like that. And we also look at ask them to complete an income and expenditure as part of the pack, and that the expenditure covers various things. Obviously, what they spend on rent, what they spend on council tax, what they spend on their energy, gas, electricity, oil, that kind of thing. Also, other areas of expenditure, the travel, if they have a car, if they drive, if they what they spend on car insurance, what they spend on vehicle tax, petrol, MOT, maintenance, that kind of thing. If they, any other form of transport that they use, they should put that in as well. And, try to make it as accurate as possible. For example, look at the food and food expenditure, that kind of thing. If they can't remember what they spend on food, it might be on their bank statement, but it's also a good idea if they keep hold of receipts they get from the shop over a certain period of time. That'll give us an idea of their expenditure on food. And we also ask in the money advice pack, we also ask them to provide information about what debts they have. Now we can also get letters from them. As part of the pack, we have a checklist, and we ask the client to provide creditor letters that they've had, and things like that, and their bank statements, because that all helps to give an idea of the whole situation that the client is facing. And we're able then, as a consequence of that, once within the pack, there's also a form of authority that we ask the client to sign, and this enables us to contact the creditor on their behalf. So the consent from the client for us to contact the creditor. And when we get this, we're able to get holds on the accounts that enables us to get that little bit of extra time if we need it to ascertain the full situation that the client finds himself in. And we can also verify balances and level of debt that the client has.
So I guess the money advice pack really kind of is a kind of all-encompassing thing. When you do get in touch with us, and we're looking to help you, it's essential to help you understand a client's full situation. So not just their income and their debts, but their expenditure, their circumstances, so that you can get kind of a full and overall picture and understanding of where they are, how they've ended up there, and what needs to be done. And then it allows you, obviously with the authority that's been given, to then start to contact creditors and start to come to resolutions and get all the information that you need.
Yeah, and one or two other little bits and pieces that I forgot to mention with the kind of checklist that we have on the money advice pack.
Mm-hmm.
There's, as I mentioned, bank statements, if they provide bank statements. Now, some clients might have more than one bank account. We do need to look at the whole situation, so that would be looking at all their bank statements as well. If they're working, what we ask for is a minimum of 3 months of wage slips, because that gives us a balanced picture on their income, especially if a client, for example, is working different hours every week. We can balance it out as an average, that sort of thing. If a client's unemployed or claiming universal credit, we ask them to provide 3 months of universal credit statements. That'll give us an idea then of obviously how much they get from the universal credit. And going back to part of what we mentioned in the previous podcast, we can also see any deductions that are coming from that. So, for example, if a client has advances coming off that, or if they have rent arrears coming off the universal credit as well, or council tax arrears, we can see all that, and we can get the full picture. And we also ask, obviously, any letters or statements that they've had about their debts, whether they're opened or unopened, going back to what we mentioned previously. And also, last but not least, we do ask for a council tax bill for the latest financial year to see. That'll sort of give us the full picture, if you like, with all that.
Yeah, and I think that could seem to people like quite a big ask. It is quite a lot of financial information, and a lot of people find it quite difficult to discuss and share information about their finances. It's something that is quite private to people, but it is essential to get that full picture.
It is. Sometimes we do have some clients that are a bit hesitant to provide the information, but with a little bit of encouragement and coaxing, if you like, most of the time we do get the information that we need. It might take a little bit of time, but the clients eventually do see that this is the best way to go about things.
Yeah, although it may be, a difficult thing to discuss and a difficult thing to even seek help about initially, it is in the client's best interest that they do come to us and are able to provide us with this information, because at the end of the day, what we want to do is to help as best we can.
Exactly. Yeah, I would say that's very, very accurate.
Yeah.
With regards to the money advice pack, another opportunity it gives us is to question you on some of your spending. Now, this probably sounds harsh, but it's not actually. A lot of people tend to find they massively underestimate how much they spend on things. So things like your weekly shop, for example, we do see people putting down maybe for two adults, two children, 40, £50 a week. That's, to me, that rings alarm bells. And then when we have a look at the bank statements, you might see lots of trips to your local kind of convenience store or corner shop. And with that in mind, we can then work together to get a much more realistic amount about how much you actually spend on, your food and drink, your cleaning and toiletries, and things like that. So the money advice pack is really essential.
Yeah, you were saying, Simon, that people can quite often underestimate how much they spend on certain things. And you use the example of a food shop where maybe someone does go to the supermarket once a week, they maybe spend 40, £50, but throughout the week they're, heading to their local convenience store and picking things up. And
Yeah.
that could be £10, £20 at a time. And actually when you total it all up, they're actually spending significantly more than they are. And it's really easy to kind of ignore these sort of small amounts of spending throughout the weeks. It's something that we all do, certainly. So you kind of have the knowledge and the experience of being able to question that and go, actually, I think maybe you're spending more than you think you are.
Very much so, and also the money advice pack. It goes. We do have a section on it where you can mention any health conditions you might have. Now, I would say probably a lot of our money advice clients are actually referred to us by either other internal departments within Russell Cromartie Citizens Advice Bureau,
Yeah.
or
Yeah.
from other external organisations. Now, generally speaking, it could be off the back of maybe a benefit check, or maybe a problem with your housing, and that's how you come to us. Now, in those situations, normally, they will have had a benefit check, etc., to make sure that they are getting everything that they need. However, if a money advice client comes to us sort of fresh, kind of out of the blue air, then what we can do is as we go through the money advice pack, is we will start to identify maybe opportunities to boost your income, or income maximization, if you like, where you might have a mobility issue, but you're not getting any type of benefit or support. What we can then do is we can refer on to other departments or other organizations to complete a benefit check, or whatever is required. It could be an employment issue, it could be a housing issue, all sorts of things that we can refer for. But as the money advice pack really is the tool that gives us the opportunity to do that. And when it comes to trying to sort your debts out, I suppose it's twofold. The less you spend, the more you've got at the end of the month, hopefully. But also, if we can try and get your income up, maybe that's with an additional element of universal credit, whether that's with a brand new benefit, anything like that, even energy advice and things like that, we can provide, or we can make referrals for. These things can really, really help, change your situation, maybe put a wee bit of extra money in your pocket. And between that and trying to save a bit of money, you might find yourself in a much, much healthier position.
And if I could just say as well, going back to what Simon was referring to earlier about being accurate about the shopping that you spend your money on, that sort of thing. It is important for us to get an accurate picture as possible with regard to that and other areas of your expenditure, because that will have a major impact on the options that a client might have towards the latter part of their case.
Yeah, I couldn't agree more. So if a client really sort of under eggs how much they spend on items, and some clients, when they get paid or when their benefits are paid into their account, they might just take the whole lot out as cash, and therefore the bank statement's really not that helpful for us. In those situations where they're under egging or underestimating how much they're spending, what can happen is when we look at what you're taking in against what you said you're spending, it could say that you've got £100 left or £200 left at the end of every month, and therefore you might be in a position where you want to set up some sort of payment plan, or but nonetheless pay your debts back. The reality, though, might be that they're actually overspending maybe by £50 a month. But because it's all been paid in cash, it's very difficult to verify that.
Yeah.
And that's really where we can start to question your spending habits. We're not looking to put you on the spot. We're not looking to say that you're overspending on one particular thing. We know people smoke. We know people like a drink at the weekend. We know people like to go out for takeaways and stuff like that. We get that. That's not an issue. So if you're really honest about how much you're spending, it really does make a big difference to how we can help. And certainly for smoking, I don't think I've ever spoken to any client who's and what they initially wrote on the money advice pack about how much they spend on cigarettes, and after a few questions on is that accurate, it always goes up. So don't be afraid to say it. I mean, everyone knows, that people spend money on these things, and they know how much a packet of cigarettes or a pouch of tobacco costs.
Yeah, and I think that's, again, it comes back to you need to have a real clear idea of the overall situation. So being honest, although some of these things might be a bit difficult to share, being honest and trying to be as accurate as possible is the best way to get things moving forward.
Absolutely.
Yeah, exactly.
So when you've finished your money advice pack, you've completed an income and expenditure, you've got an accurate overview of somebody's circumstances, what are that client's or some of the options available to that client to start to deal with their debts?
Okay, so generally speaking, your options are broken into two categories, right? So you've got non-statutory options and statutory options. Okay, so think of them as informal. So there's no formal agreement or anything set up. And then for the statutory side, it's more formal. Okay, so there is an agreement that needs to be followed. So if we look at the non-statutory side of things, the informal side of things, there's a range of ways that we can assist. Okay, so generally speaking, it could be things like what we term a pro rata offer. Okay, so that's where we've written out to all your creditors, we've explained your financial situation, we've shared what's called a financial statement. So a financial statement is a pretty basic document, but it's very important. It's your income, your expenditure, and your debts, and that shows whether or not you can afford to make a payment or not. So if with a pro rata payment, if you had some disposable income, so income left at the end of your every month, so in other words, your expenditure is lower than your income, we could make an offer to your creditors to say spread the cost out of what you owe. So rather than paying hundreds of pounds every month to different creditors, you might be able to sort of bring that down to a more manageable £100 a month maybe, but you spread it out over a longer time. Okay, now in the background, we can sort of proportion out what you can afford in a way that all creditors are treated fairly. So in other words, they're all paid off at the same time. So they all get a different amount. They don't all get the same amount, but it means they'll all be cleared at the same time. So that's a pro rata offer, and that's an informal offer. If, for example, you had no disposable income, okay, and you were aware of something happening in the near future where your circumstances were going to change. So a good example would be you're currently unemployed, but you've been given a start date for a job, but it's maybe 3 months down the line, okay, and that's going to make a big difference. What we can do is we could make what we term a token offer. So again, we'd write out to your creditors, we'd give them your financial statement, but this time we would only be offering them a very minimal amount. Now, generally speaking, that's about £1 a month. Okay, so it means you are paying off your debts. Very small amount, yes, but you are paying off your debts. And it's a kind of stopgap until your circumstances change. So once your circumstances are changed, you could then get back in touch with us, and we could look into whether or not another option is available to try and help you clear those debts quicker and maybe easier. Okay, so that's a token offer. Another option could be, and this can be informal or formal, called a moratorium. So at the moment, a formal moratorium, okay, it lasts 6 months. So there's not very many positives to COVID, but they did change the rules on moratoriums, and it's been stretched out to 6 months. And what that means is creditors can't take any, and this is key, new action against you whilst the moratorium is in place. So in other words, it's to give you breathing space to get things, back on track. So if a creditor is already in the process of taking you through the sheriff court, that a moratorium will not stop that. But if you had been, I use the term loosely, threatened with court action, and you put a moratorium in place, they wouldn't be able to do anything until the moratorium had ceased. So an example of where this is useful, I had a client who had set up a new business. They had got some debts, and they really needed to, and they were a sole trader, so they were personally liable for these debts. And they were hoping their income was going to go up significantly, but they just needed some breathing space. So they decided to put a moratorium in place, which stopped any further creditor action, or any new creditor action, sorry, and that gave them the breathing space to kind of get their business on track, and then at the end of that, start making payments again. Another option, now we can talk about this, but we can't support you with this, is what's called a consolidation loan. So if you were in the financial situation where you could actually take out one large loan, and that would clear all your debts in a one-er, and then you've just got one payment to make, that could be an option. It's not an option. We can, like I said, we can mention it, but it's not something we can support you with. We can't help you go out and get a loan. This is a really strange one for the last of the kind of informal or non-statutory options, is you could do nothing. And this is a perfectly valid, avenue to explore. There are some cases where a debt might be very close to being written off. So debts only have a certain time frame to be cleared, or acknowledged, it's called. And if you're almost at the end of that time frame, you might decide to do absolutely nothing and hope that nothing changes, and it is actually written off. So sometimes that can be a valid option as well. Doesn't happen very often, but sometimes it can be. Statutory options. So these are the formal options. These are the ones where you're really sort of locked into a bit of a contract. Although that doesn't mean they can't change, but nonetheless. So I guess when people think of debts, the word bankruptcy often rears its head. Often a very scary word for most people, but once it's explained, it rarely carries the same sort of weight that people initially thought it had. Bankruptcy potentially could clear all your debts, okay, with certain impacts to people's lives. Bankruptcies are split into two categories. You've got something called a minimal asset process bankruptcy, and you've got a full administration bankruptcy. Okay, So I guess a minimal asset process bankruptcy is a kind of like a diet full administration bankruptcy. This is where you would have minimal assets. So say, for example, you rented your house, you didn't own a car, you maybe had no disposable income, your only income was benefits, these types of things, and you don't owe more than a threshold, which is currently £25,000. Then, with a minimal asset process bankruptcy, it runs for 48 months. But for the first 6 months, you're what's called a undischarged bankrupt, where you've got lots of conditions against you. You can't take credit out and things like that. But then after that period of 6 months, you become a discharged bankrupt, where things begin to sort of settle down. Now, with both types of bankruptcies, there are obviously impacts to you. If you come into any assets, so maybe a family member passes away or something, and that's quite a common question. If you've got somebody that you don't think is going to be about in 48 months, if there's inheritance or property or any type of asset, you have to declare that, okay? And then they've got a vested interest in that asset, so they could force you to sell it, or they could take it from you to pay some of your debts back, okay? So it can also impact your employment. So, for example, I can't do this job if I'm bankrupt. I suppose that's a reassuring thing to hear, but you can't work in the finance sector and things like that if you're bankrupt. Then we can look at full administration bankruptcy. So this is the kind of the standard bankruptcy, if you like. Pardon me. With a full administration bankruptcy, that could be for any amount. So you could have houses involved, with assets and things like that. So you could have houses involved. You could even have businesses involved if you were the director of a company, all put into the bankruptcy. And again, this can clear all your debts, but as with the minimal asset process, it can also have major impacts. So, for example, if a business was included, you would no longer be able to be the director of a limited company and things like that. So it can have a big knock-on effect. Generally speaking, for a minimal asset process bankruptcy, there is a small administration fee of up to £50. And with a full administration bankruptcy, it's currently at £150 to actually apply for. With a full administration bankruptcy, you also potentially could be looking at something called a debtor contribution order, where if your income is higher than your expenditure and you've got a little bit of money left at the end of every month, you could be required to pay that to the accountants in bankruptcy, which will then go back to your creditors. So that's where we are for bankruptcy. Sorry, I think you were going to say something there, Emily.
No, I just think it's you've highlighted it really well there. But bankruptcy, although maybe it's quite a scary thought, but it's sometimes the first thing that people think of when they think of debts. They think that that's going to be the solution, and I think it's true of all of the things that you said here. The option that's best for you very much depends on your circumstances, and bankruptcy certainly isn't always the best option.
I think to pick up on what you were saying there, Emily, yes, with the bankruptcy, we quite often, I don't know about you, Simon, but quite often I get calls from clients who want help with their money advice, and the first thing they say is, I want to go bankrupt. They think that's the only option available to them, which, as we will explain to them going through the process, that bankruptcy is not always the only option that they have.
Yeah, absolutely. And whether or not somebody comes on the phone or meets me face to face and says I want to go bankrupt, it's part of my role and yours, I'm sure, as well, William.
Yeah.
That we actually do explain all the options that are available to them, because there's an awful lot of unofficial money advice from friends and family and things like that, or forums on the internet, and a lot of that can be slightly off the mark. An awful lot of people see TV shows that might represent how bankruptcy and bailiffs and all these types of things happen south of the border, and it's very, very different in Scotland, and that can really be quite intimidating for some clients. But once you explain the differences, all of a sudden they become much more invested in, looking into all these different options that we have access to.
Perfect. So are there any other statutory options that are available for people?
I'm glad you asked, Emily. Yes, there are. There's two other main statutory options. The first I'll touch on is what's called a debt arrangement scheme. So it was introduced by the Scottish Government, and it's a scheme that gives you a bit more time to pay your creditors without the threat of any legal action. Now, with a debt arrangement scheme, you've got to have some disposable income. So it goes back to kind of your, the financial statement. Your income has to be more than your expenditure, okay? And under the DAS scheme, debt arrangement scheme, DAS, you can apply for a debt payment program, and that allows you to pay your debts off over a longer period of time, okay? Now, it does freeze interest and fees and charges on your debts, and essentially, it just gives you a more manageable bite-sized chunk to pay your debts back. Now, a debt arrangement scheme is I suppose similar to a pro rata payment, whereas a pro rata is informal, debt arrangement scheme is formal. But the big difference is with a pro rata payment, you'd be making your informal offer to all your individual creditors. With the debt arrangement scheme, it's actually managed through the accountants in bankruptcy. Now, I do need to stress this has nothing to do with bankruptcy. It just so happens they administer the scheme. But you would essentially make one payment to them or a payment provider, and they would then distribute that amongst all your creditors, okay? So you're not messing about with different account numbers and sort codes and standing orders and all that sort of stuff. It's just one payment to them, and they do the rest. They split it all out. Now, it's a sort of strange scheme, whereas the creditors actually pay for the scheme so you don't pay any extra. It doesn't cost you anything extra, but the creditors actually lose, I think it's 22%, to help fund the scheme. So they get the bulk of their money back, but not all of it, and that's what helps keep the scheme moving forward. The other option could be a trust deed. Now, a trust deed is a formal agreement between yourself and not us this time, or the accountants in bankruptcy. It's what's called an insolvency practitioner who becomes your trustee, okay? Now, with a trust deed, you've got to be able to make regular payments to your trustee from your income, or have assets that you can use to put into the trust deed. It runs for 48 months, generally speaking, and at the end of that, if you follow all the rules and all the restrictions and so on and so forth, then that'll have you debt-free at the end of the 48 months, okay? Now, should this be an option for you, what we would be doing is providing you links to, finding your own insolvency practitioner, and then you would go and speak to them directly. So we can talk to you kind of like a consolidation loan. We can say it's an option, but we unfortunately can't help you any further than just saying it's an option. So that kind of breaks it down between your sort of non-statutory or informal options and your statutory options or formal options. Okay.
Yeah, and as we said before, I think there's a large range of different offers that are available to different people depending on their circumstances, most of which you can help with. And then in the case of the consolidation loan and a trust deed, you can, advise that it is an option, give guidance, and, let people go and take those options themselves, I guess.
Yeah, I mean, ultimately, what we're here to do, I mean, we're here to help the client, and if that's assistance that we can directly provide, or if that's assistance in identifying other people, whether that's other charities or organizations or companies or individuals that can assist, that's what we will do. And if somebody wants to explore trust deeds, we can take them through how a trust deed works. We can give them the confidence and empower them when they're speaking to an insolvency practitioner to make sure they're getting the best deal for them. And if they've got any questions off the back of a meeting with an insolvency practitioner, they can come back to us and ask us, to get an impartial and an impartial take on what was discussed. So we're just here to support people, and that's what we're all about.
Yeah,
Exactly,
and
yeah.
I think, leading on from that, again, it's important to highlight that at CAB, that everything that we do is free, confidential, impartial, non-judgmental, and non-discriminatory. And I think most importantly, it's non-obligational. So it is always the client's choice on how to progress their case and how to proceed and on which option they want to take. We're there to provide support, guidance, advise them on the best options, but ultimately it is always their choice.
Yeah, sometimes we do get the client saying to us, "What would you do? What would you do?" That's not something that we can answer for them. It is, in the end, it is their own choice. We can give them the options, but it is their choice.
Mm-hmm.
We're not shy to talk about the negatives of all the options. I mean, ultimately, of all the different statutory, non-statutory options, all of them have negatives. I mean, essentially, if you don't follow your contract that you have for paying back a debt, then all of them, anything on top of that will have a negative impact, whether that's on your credit rating or your ability to borrow more money, or even down
Exactly.
to employment options. They all have negatives, and we don't shy away from that. We always explain that to all our clients, and it puts you in a much better position to make a good decision for your own finances. We're also FCA accredited, so that's the Financial Conduct Authority. So we're fully accredited by the Financial Conduct Authority. There's a fair bit of training involved in this job, and then ongoing training to keep on top of things. And we're also accredited by the Scottish National Standards for Information and Advice Providers. So again, we're fully accredited to be giving this information. So when you come to us, you can feel confident that you're getting everything that you need.
Yeah.
I also want to just touch on something else that sometimes concerns people, and it falls back to confidentiality. So with regards to when speaking to clients, and maybe a good example of this might be your TV license. We do have clients that don't pay a TV license. What William and I will do is when we're going through their income and expenditure, we will mention to them the fact that this is when you need a TV license, and that's it.
Exactly.
We're not going to be contacting the TV licensing people to say, oh, by the way, this client's not paying their TV license. That's not what we're here to do. Like I said, we will explain when you need a TV license or whatever the particular item is, but we aren't going to anyone else to tell tales, if you like. So that's entirely up to you whether or not you take our advice and maybe get a TV license, or whether or not you continue to not pay it. So that's we're totally confidential in that respect. So anybody that comes to us, it doesn't actually matter what the situation is, we can assist you. The one exception to that would be obviously if we identify fraud. Again, we wouldn't share that with anyone. We respect your confidentiality and your privacy, but we obviously may not take you forward as a client unless something was to change. So there we go.
Mm-hmm. Okay, so I think just to kind of highlight what we've discussed today, the best thing that you can do if you've got debts that are becoming unmanageable and out of control is seek help, whether that be from ourselves or from other advice agencies. But if you do come to us, you're going to be asked to complete a money advice pack. And although this may be a bit daunting, it's really important that we can get a full understanding of your circumstances, not only because we can look at what your options are, but also we can help to understand and identify issues with your spending, and maybe underplaying things or just not realizing how much you're spending, and help you to work out what your income and expenditure is. Look at your options, look at ways you can perhaps manage and maximize your income as well, and then kind of go on to look at, is it non-statutory, statutory options? What are the options that are best suited to you? And of course, it's always up to you to decide what you want to do.
Yeah, absolutely. And if I could add one last thing, you know, we're free to use, and that means anybody can come to us. And you know, in the current climate, it's, you know, our services are in demand, and you know, for us to kind of progress cases, you know, we touched on in the first part and the second part the importance of, you know, providing information to us as quickly as you can, and you know, communicating with us. But you know, we spend an awful lot of time, unfortunately, chasing, you know, clients for things, and you know, people missing appointments, etc. Yes, that's all part of life as a money advisor, of course, but it does limit our ability to carry on taking on new clients. So you know, if we can try and help people as efficiently as possible, and really that it's that communication that's vital, we can actually increase our capacity and help more people through a similar situation to yourself, if you know what I mean. So yeah, it's really important to work with your money advisor, and yeah, it allows us to carry on providing an excellent service.
Absolutely, and I think it's a really invaluable service, particularly at the moment when people are struggling so much financially. You know, all we're asking for is kind of open and honest communication, and you know, CAB is a safe place to communicate with us. Everything is confidential. We're completely impartial. We want to help you the best that we can, and for that to happen, we need you to give us as much information as you can and just keep in touch with us.
I think that's a beautiful way to
Exactly,
put it.
yeah.
We are a safe place. Yeah, you can come to us for anything, and I mean literally anything, and we will try and help you.
Absolutely. Okie doke, I think that's a great place to wrap it up for today. Just want to highlight that if you do have debt issues or debts that you feel are becoming unmanageable, you can get in contact with us at Ross and Cromarty Citizens Advice Bureau. Our number is 01349 883 333. You will take some very quick initial details from you at reception, and then you will be passed on to a qualified money advisor, quite possibly William or Simon, who will then get in touch with you and start to help you get your money advice pack completed and start to progress your case. As always, if you have any topics that you would like us to cover in our podcast, please let us know. You can add a comment below the video on YouTube. You can contact us via our Facebook page, or you can email us at advisor@honestcab.casonline.org.uk. Thank you very much, both of you, for joining me today. It's really been very interesting for me, from my perspective, to get an understanding of what it looks like to be receiving money advice. A lot of my clients are also your clients, and it's quite beneficial for me to see the process that they're going through and understand some of the options. And I hope that our audience have felt that as well, that they've, you know, got a better understanding of what it means to be in debt and what can be done.